Let's talk the overall markets on a day when the Dow hits 19,000. Ari Wald with Oppenheimer, Max Wolff with 55 Capital. Ari, I'm going to start with you in the charts. Took us 12 days to go from our previous last close below 18,000 to 19,000. Is that sustainable?
Yeah, we think so. Yeah, we think so. You know, how we see it, this is very classic bull market behavior that, you know, when the Fed usually starts to tighten interest rates, you have your mid-cycle correction. That's what we've had over the last year, the very wide gyrations. And now we're breaking out to the upside, Brian. We see the inflection from the 200-day moving average. And not only that, not only are we breaking out, we're breaking out with the right leadership. Risk is coming back to the market after really how we see it, a 2-year decline favoring risk-off trades. So we think the bull market's continuing. Talking about Dow 20,000, it's about 5% up from current levels. I think that makes sense looking out into the first half of 2017.
Max Wolff, are you in the Dow 20,000 camp before, I don't know, next 4th of July?
Before Thanksgiving, why not? So
it actually happened already. It was so fast we didn't even report it.
5 intradays, probably in the next commercial break, which is why you have to stay tuned through that break. Look, what we think is the market's staggering around a little bit inebriated here. And when you've had a few drinks, you think you're sober, and you'll have a few more. So it's quite possible that the other 4% we could get there. What we fundamentally think is those terrible last 8 years saw a tripling of most of the indexes and actually weren't that bad. There were some major disappointments, but assets weren't cheap, not on a historical basis, not on a PE basis, not on a relative international basis. They're even more not cheap now. And the truth is, while it's fun, it's nice, and maybe it's a nice respite from the doom and gloom we talked about going into the election, we've now kind of baked in success in everything, no blowback and no failure for the next president, and that would be awesome. We'll all be delighted if it comes to pass.
Is that a no then on 20 grand before the end of the year?
Yeah, so we think we're much more likely to see 18 again than 20, but really the short term is not what we do. We do sort of for the long term. We risk target, and we're there to sort of be sober perhaps when some other folks aren't.
All right, do not drink and buy stocks, according to Max Wolff. Ari Wald says let it ride. He thinks the charts show a lot more upside. Guys, that's why we do it both ways, charts and fundamental. Both of you, though, have a happy Thanksgiving, and for goodness sakes, don't talk politics. For more Trading Nation, visit our website, tradingnation.cnbc.com.
Every trader should know that losses are part of the process. So in an effort to reduce your risk and define your max loss, consider using static stop or trailing stop orders. This can help eliminate emotion from your decision making and set you on the path to consistent trading.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.